Hello.
Good afternoon.
This week we're going to do a video summary of our Ben's Barometer, and the topic this month is now a good time to buy. So we are week 2 of level 3 with 4 new properties on the market and off to a frantic pace. What have you been finding?
It's been busy. I mean, obviously, in the absence of being able to do open homes, private viewings is the new way to introduce people into the property, and we've been busy. A lot of showings since last Tuesday.
So why is it, do you think, that all those people think that now is a good time to buy? So we're going to touch on, though, a few reasons, that may be propping up the market for now or for the foreseeable future. In a slowing market, and that's yet to be seen, there is a much more leisurely pace. So pre-lockdown, it was fairly frantic and has been for the last few years, and that's fairly frustrating for buyers, and we understand that. So in order for buyers to be successful offering in those kind of markets, they really need to be putting their best foot forward at all times and offering unconditionally. And that can be a little bit of a risky scenario because it doesn't always allow people to do their due diligence on a property or carefully consider, the various aspects of buying a property. Where in a slower market, days on market pushes out, competition can drop off, and that way buyers can really kind of confidently offer on property after having carefully considered, is it going to meet their set of requirements? So in a slowing market, what we do see as well is less people offering on property. And so how does that work from a buyer offering perspective?
Yeah, I mean, for those that have been out there, you would have heard that kind of best foot forward situation. You may not get an opportunity to look at it again. If the market slows, you might have the opportunity to negotiate, and that's fantastic as a buyer. You can actually start having a conversation with the vendor, obviously via the agent, and you may, in some circumstances, be able to get it, depending on the skill of the agent, for slightly less than you intended to, your maximum price that you're probably willing to go to. So having the ability to negotiate is fantastic.
So when you say negotiate, many of the buyers out there would have had to negotiate in a tender or post-auction situation anyway. But when you're talking about negotiating in a slowing market, you're meaning one buyer and negotiating with one vendor via an agent?
Yeah, you're in the absence of competition. So you say, look, I would like to make an offer on that property. There is no other competition on that property, and you go forward and make that offer. And that can be a starting offer, it's a conversation piece, and then you'll go into what could be a negotiation where the vendor will come back to you and say a certain price as well. So you're having, via the agent, a dialogue over, can you meet at a point where you both agree on?
And a skillful agent will negotiate to a midpoint that's a suitable outcome for all parties. And a less than skilled agent might mean that you are getting it less than your all-in price.
No, definitely. I mean, there are different skill levels, of course.
Yeah. And of course, many a market is held up by a low interest rate. So on that front, interest rates are pretty low at the moment, and
I mean, for those that are out there and it's that have been looking, you can kind of get interest rates at around about 3%, which is fantastic because obviously it helps your bottom line and it makes it more affordable. And I was even saying to somebody the other day, even if you go back through prices and previous interest rates, it was probably more expensive to own a home a few years ago at higher rates than it is today, even though prices have changed. So cheaper interest rates really does help buying.
And I guess from a serviceability point of view, if you've been out looking for a new family home, for example, and your serviceability allows you to buy a good quality family home, right now it may be that if you're both employed or one person, that you've got good stability, you can now go and service the mortgage for a great home or buy your dream home. So those are the kind of benefits for people buying in a slower market with lower interest rates.
Well, I mean, even on that point of the lower interest rates, you move into the investor part of it. And I guess it's more about the margins for investors. A lot of people think, I want so much return from the property. But if you can get money at a certain level by the property, and you can get rent at a certain point, it's that gap between the cost of the money and what you're getting on the return is the margin that most investors will be looking for at the moment, and it's a great way to approach it.
And one of the buyer pools that really surprised us when we were qualifying buyers during the lockdown was the investor pool, and we actually have as many qualified investors as we do first home buyers. So that was surprising, but really unsurprising when we look at it and thinking about interest rates being low and taking advantage of what could be, and especially in depending on what part of the country in a slowing market.
Yeah, it piques people's interest for sure.
Yeah. The next part of kind of there also is loan to value ratios. Now, obviously there was an announcement last week by the Reserve Bank to completely scrap loan to value ratios for the upcoming 12-month period. Now, at this point, we haven't yet had an announcement from the banks about what their appetite for lending at those much more reduced rates were. That was really an economic tool to get cash flow into the economy, propping up businesses, allowing for those mortgage holidays. But what it may mean to those kind of really good quality, less risky lenders is slightly larger loans issued, but that will vary from bank to bank. They all have different appetites for lending at different points, and so if you wanted to discuss those kind of things with your mortgage broker, then they will be able to point you in the direction of the bank that would be most suitable for your needs. But it may just be that first home buyer, maybe not so much, but for a investor with a good, capital heavy portfolio, it's a great time to be borrowing money.
And I think another thing as well is like if you're thinking about buying, try to avoid too much commentary around it. I know we're doing a bit of commentary at the moment, but the more the wild predictions that people can make. When I was valuing during the GFC, there was a particular commentator who would always say that the market's going to drop by so much percent, and actually in fact it probably went up 1.5 times there over that period of time.
Well, it did initially drop though.
Yeah, but it was a small drop. I mean, there wasn't, and
we're talking Wellington here.
Yes, but even in Auckland had the same effect where they were talking about it. But the reality is people don't sell their houses if they don't want to accept a loss, or they don't have to sell. It's not, real estate isn't a tradable commodity like stocks. The majority of people that live in their houses for shelter. So, if it's not the right time for me, I'm just going to push the pause button and I'll come back later on. So again, don't try and read into the commentary too much and look for wild predictions. It's the right thing for you to do and it stacks up, then just go for it.
Yeah. And so if you are buying and selling in the same market, which many people will be doing, upsizing or downsizing, you may lose a little bit at one end, but you may gain a little bit at the other. So it ends up being a neutral kind of experience. So people that are like in the market looking to put shelter over their heads, that is going to be a neutral experience in any market, in a boom market or in a down market. But where you may want to take a slightly more strategic approach is if you're moving markets. For example, if you were to sell up in Queenstown and move to a more buoyant market, say Wellington, that may be a little bit of a riskier scenario. Same thing if you're looking to buy a house and quickly sell it. You probably want to consider doing that and reconsider doing that unless you're experienced at kind of flipping.
Oh yeah, speculation is probably not the right thing at the moment.
No.
Yeah, long-term approach. But I mean, if you are interested in anything that we've got on the market, you're more than welcome to get in touch and we're happy to show you through.
Yeah, so obviously we're talking on the Wellington market. That's what we're experiencing for this week. Wage subsidies are obviously going to be expiring at the end of June, and there's a 6-month period for the mortgage holidays. So it's going to be interesting to see down the track, once the buyers have bought, once the wage subsidy have ended, and once people get used to what is going on in the economy, once we kind of come into level 2 and most businesses are up and trading again, what flow-on effect that will have in housing. So we'll deal with the facts and what we're experiencing on the front line, and we'll keep you informed on the route. But we look forward to talking to you whenever you want to talk to us.
All right. Thanks, guys.
Thanks. Bye.